Now let's understand what is GSEC market, that is government securities market. So GSEC market or government securities market is basically a bond or other type of debt instrument that is issued by the central government or the state government with a promise of repayment upon the maturity, and definitely there will be some interest that will be provided by the state government or the central government, I mean whoever is issuing this debt instrument. Now, this government security is a tradable instrument issued by the central government, as we discussed previously, and definitely comes with the debt obligation from the government. Now, this could be for short-term period or long-term period, and since the debt obligation is from the government, which is backed up by the tax, which is backed up by the power of taxing power, that is collecting taxes from its citizens. So it ensures that it is one of the most secured form of investment. Hence, the return will definitely be less than that of the corporates, since the risk is very much less here. So this is mainly about the government securities or GSEC market, right? So now let's understand what are the different types of government securities instruments there in the government securities market. So first one is your treasury bills or T-bills. So this is when the government needs money really for a short term, that is less than 364 days. It could be 91 days, could be 364 days. That's the life of the particular debt instrument. So that is called T-bills or treasury bills. So after once that maturity comes for those debt instruments, the government repays back the debt amount along with the interest. So that is mainly your treasury bills. So cash management bills, when there is a temporary difference between the cash flows of the government, and hence it can issue the cash management bill to fix that difference. It is generally for 91 days. Treasury notes is slightly for longer duration. Let's say a government security product which basically has a maturity somewhere between 1 year to 10 years will fall under treasury notes. Treasury bonds, where it is for slightly higher period, let's say anywhere somewhere between 10 years to 30 years. So generally the treasury bonds are for 20 years and 30 years. The next one is your dated government securities, which comes with a fixed date when the government is going to repay the amount. So that falls into your dated government securities. So in the next video, we are going to see each one of them in detail one by one.